Okay. So welcome to today's session. We are looking at cash flow statement, IAS 7. And specifically, we are looking at this particular question, which was quite an interesting question. So many students were not able to answer this question totally. So we are told here, Lilongwe, so this is August 2023, question number 4A. Lilongwe Limited is a public listed company. Details of the company statement of financial position as of 31st March 2022 and 31st March 2023 are shown below together with other relevant information. So you can see at the end of the day, what do they want us to do, ladies and gentlemen? What they want us to do at the end of the day is to require the year, give them a cash flow statement for Lilongwe Limited for the year ended 31st March 2023 in line with International Accounting Standard 7 cash flow statements. So the examiner is silent. Whenever the examiner is silent as to the approach you should use, we shall always use the indirect method. Remember, cash flow statements have three sections. They have three sections that we will always be remembering. We have three sections. And the first section of our cash flow statement is what we call cash flow from operating activities. So we shall start with operating activities. We start with the operating activities like that. And operating activities, cash flow from operating activities, remember we start with a profit stroke loss before tax. Profit stroke loss before tax. And then we come and do some adjustments. So adjusted for, is there somebody who is able to remember the acronym? Is there somebody who is able to remember the acronym that we normally use under operating activities? Anybody who is able to remember the acronym that we normally use under operating activities, my friends? Yeah, great. I will have to start from up here. So we are looking at operating activities, and operating activities, as we've said here, we must start with a profit. We must start with profit or loss before tax. The figures there are in shillings millions. And then we do adjustments. So we have here adjusted for. So adjusted for, what do we have here? We shall take here dial, if you remember. So it is dial, God's number for food. Or you rest in peace totally, indefinitely. So in this case here, adjusted for, we have here dial God's number for food, or you rest in peace totally stroke what here? Indefinitely. Totally stroke indefinitely. So you will dial, we normally dial God's number. So you dial God's number for food, or you shall be resting in peace totally indefinitely. Allow me to adjust my camera. So then straight away, we know in this case here, I never did a very good job at Shalom account. So we know that this first D is depreciation. So depreciation, we have impairment of goodwill, and of course, other assets. We are told they are impaired, but in most cases, it's impairment of goodwill, right? Like now at your level, this is not easy for you to get because you know here, we don't do group cash flows. So then we have here amortization of intangible assets. Amortization of intangible assets. We have here loss on disposal. loss on disposal. Then we have gain on disposal. Then we have our finance cost. Our finance cost. This OR stands for working capital. Working capital changes. Working capital changes, you underline this. This stands for receivables. This stands in this case here for what? Inventory. Inventory is a working capital, remember. Then we have payables. Then we have tax paid. And then we have interest paid. Let me know once you guys are able to write up to here as I adjust my board one more time. Let me know once you're able to write up to here. All right. Then we shall start, ladies and gentlemen. So done. So we shall start with the first one. So now you start looking for this information. And I shall always begin with depreciation. So have they given me the depreciation amount from the question? Anybody who is able to see the depreciation amount from the question? Oh yes, I'll be able to pick this. This is very easy. I've never understood why students fail a cash flow question. If you fail a cash flow question, then you have a problem. Let's start in this case here with the profit stroke loss before tax, the PBT. But this time around, the examiner was very bright. He gave us an extracted income statement. Yes, note number 4. He has given us here, the following is the statement of P or loss extract for the year ended 31st March 2023. And then you can see here, we have loss before tax. This was a loss thing. We are used to taking profit before tax. The examiner is also quite a tough examiner. So here he came and he gave us loss before tax. We shall start with that 44 negative. So profit or loss before tax. So we start with that 44 negative like that. 44 negative like that. And then now we look for depreciation. So depreciation, we start with the first one in the adjustments. So depreciation, have they given me depreciation? Oh yes, you can write there, depreciation, note number 1. Remember, it is depreciation for the current year. Depreciation for the current year. This examiner, to confuse you, he gave you depreciations for 2013, the current year, and depreciations for last year. We are working with these two depreciations here. So we have depreciation for land and depreciation for plant. So 12 plus 148. So from note number 1, you'll be able to pick, in this case here, depreciation, note number 1. So from, you write there note 1. So depreciation for land is 12, the current year. And then we have here 148 for plant. 148. So then, is there somebody who can give me this total? Is there somebody who can give me this total pretty first? Anybody who can give me this total pretty first? And my board is not the very best, but I don't know what's happening today. We shall overcome. Okay, so ladies and gentlemen, up to here, are we together? How you would have gotten, these are, at times you get your examiner is very, very generous. He's going to give you like 2 marks for each correct tick. So already you have your 4 marks. Now, this impairment of goodwill at your level, not much. Look at amortization of intangible assets. Look at your balance sheet, your statement of financial position. Are you able to see any intangible assets? in the balance sheet, if you look at the balance sheet under current assets, non-current, we have intangible assets. The opening balance is 510. And then you can see the closing, the most recent year, we closed the most recent year at 400. In the additional information, there is nowhere they told us that we sold any intangible asset. There is nowhere they told us, in this case, that we bought any new intangible asset. So it means that the reduction of this intangible assets value from 510 to 400 can only be a loss. What we call, ladies and gentlemen, here, amortization loss. So this amortization, I will take 510 minus 400. So 510 minus 400. How much are we getting there? So the amortization of the intangible assets is 110. The amortization of the intangible assets is 110. Free marks, free ticks. I'm moving on. Free marks, free ticks. I'm moving on. But I would want to know whether up to here, are we really together? Up to here, are we really together? Please confirm whether we are together. Confirm whether we are together. Confirm whether we are together. Thank you so much. Now, ladies and gentlemen, after that, now we are looking for, loss on disposal. Go to any notes that are talking about disposal. Look for information talking about disposal of land and buildings. Land and buildings. So like you can see, ladies and gentlemen, this is very straightforward. Look at note number 3, and you must write like that for your future revision. You can see note 3. During the year, the company acquired a new plant at a cost of 60 and sold some old plant for 15 million, incurring a loss of what year? A loss of 12 million. Incurring a loss of 12. So loss on disposal is 12. Loss on disposal, in this case here, is what year? Is 12. From my experience, when you get loss on disposal, it will be very hard for you to get gain on disposal. Very, very hard. Like in this questionnaire, there is no gain on disposal. No gain on disposal. No gain on disposal. Now, ladies and gentlemen, from there, we shall be able to look at any finance cost given in your P&L. I'm simply following this pro forma here. So finance cost, any interest expense, in your P&L, in your extracted P&L, have they given me any interest? Any finance cost? You can see in this case here, finance cost. How much are you able to see for finance cost here? I'm able to see 24. So because you are adding back, here they are subtracted as you are adding back. So it shall be positive. So here we have finance cost positive 24. Finance cost positive 24. So remember, costs and losses, you add back. Costs and any losses, you are going to add back. Like depreciation is a cost, you are adding back. Amortization is an expense to us, you add back. Loss is a cost on us, we add back. The same case here with this finance cost. If we had gain in this case here, of course, gain must have been added into this profit before tax. So to make good, we subtract it. So don't be cheated that because finance cost there is negative, you shall have it here as negative. No, all costs will always be added back. All costs will always be added back. Now, ladies and gentlemen, remember, we have this, anytime we talk about operations, we have in this case here, revenue, all right? So we have revenue. This is an operational thing because we are raising this every day. We have our cost of sales. We are incurring these expenses every other day to support our operational revenue. And then we have here any operating expenses. So like that. So then this one is what will be able to give us, what we call our operating our operating profit. So what you do after you reach here, after you've been able to pick all things, you must come in this case here to where you have your profit before tax. Where you have this profit before tax, please look north, look up, and try to get any non-operating activity, you remove it from here. You try to get any non-operating activity with the concept of looking north. You go to profit before tax, look north in your income statement, look up to see whether we have any non-operational activities, whether we have any non-operational activities. So let me show you how I'm looking north. You see, we have here loss before tax, this negative 44. So looking north, I can see finance cost. Of course, finance cost is non-operational, and I've been able to make adjustment. I've been able to make adjustment there. Then I can see operating loss. This is very good. This is operational. But how about this interest receivable? Interest receivable, ladies and gentlemen, can never be under operations. This interest receivable, the 12. If, for example, we gave out a loan and now we are being paid interest, if it happens, then that, of course, in this case, here will be under investing, right? If it is about long-term borrowings, where in this case here we are paying interest, all right, then, ladies and gentlemen, that should go under financing. This interest receivable can never be under operations here. So the interest receivable, you must come and do what here? You must come and create space for it here. So the concept of looking north, we've been able to see interest receivable. This interest receivable is non-operational and it was added here. So because it's an income, I must come and do what here? You subtract 12. You must come there and then you get to subtract 12. This concept of looking north to identify all non-operational activities. You go to profit before tax and then you look north. You get, I mean, this item is not supposed to be here. It's not supposed to be here. It's not supposed to be here. You remove it. It's something we'll be able to get used to. All right. We are doing very well. Now let's go to receivables. So in this case here, working capital changes, these are 6 marks for free. These are 6 marks that I'm being given by this examiner, just like that. Remember, under receivables, under all these working capitals, we take O minus C. Opening minus what here? Closing. So let's track the receivables figure. Is there somebody who is able to see the receivables figure? Let's track the receivables. We are tracking the receivables. Where do we get them? In the balance sheet, in the statement of what year financial position. When you come to the current assets, we can see our trading receivables. Remember, 2022 is our opening year. 2023 is our closing year. So I'm taking 2022 minus 2023. So for the receivable, 2022, what are you able to see there, my good students? For the receivable opening, what are you able to see there? Opening for the receivable. What are you able to see as you're opening? Please talk to me. As you're opening, please talk to me. Thank you very much. 300. So I will take 372. Minus what year? 372 minus 300 what year? Is it minus 350? 372 minus whatever. 372 minus what year? 372 minus what year? 372 minus, you guys have got better eyes than mine. So I'm under receivables here, remember. So it is 372 minus 808. So long as in this case here you are taking opening minus closing, you shall not be making those arguments of what year that these receivables have reduced, that we paid nothing. So long as you are taking opening minus closing, then you simply get the answer and write the answer as it is. If it's negative, you simply say negative. Like now I'm being given negative what year? Negative 436. You simply write like that. I don't like that argument where students will come and they start, in this case, I'm making an argument that receivables now have been increased. If they have been increased, you have given away money. No. So long as I'm using this opening minus closing, the answer, the sign I get there is good to go. So we go to inventory and we do the same. So let's go to inventory and then we do the same. So under inventory, is there somebody who is able to see the opening? Anybody who is able to see the opening under inventory? I hope you guys have these papers. Koros is telling me opening for inventory is 420 minus closing for inventory. What are you able to see as closing figure for inventory? I hope you have the papers, all of you. 350. 350, 350, 350, 350. So 420 minus 350 gives me what here, somebody? It's a positive answer, so I'm going to have it there as positive. I'm going to have it here as positive. So I'm being given a figure of what here? I'm being given a figure of 70. I'm being given a figure of 70. So payables is a liability. Payables is a liability. Who is able to see the opening balance for payables? Opening balance for payables? Yeah, thank you very much. Tony must be a very good student. And of course, the others. And of course, the others here were giving me these figures. So payables opening. Payables opening. They're giving me a figure of 515. Are they able to see that 515? Payables 515. Emmanuel has also confirmed. We can come here and confirm. You see, working capital is normally a free mark. Working capital is normally a free mark. Working capital is normally a free mark. Because like payables, I will get payables under current liabilities where I'm able to see trade payables. So I can see 515. I can see 515. I can see 515. I can see 515. I can see 515 minus 530. So 515 minus 5. Now, my good students, remember for liabilities, there is some abracadabra we normally do. Is there somebody who is able to remember for liabilities that there is some abracadabra we normally do? Is there anybody who is able to remember liabilities there is an abracadabra we normally do? Yeah, for liabilities, we have to interchange, or rather for liabilities, we must change the sign by multiplying this by minus 1. It's just a rule. It's just a rule. It's just a rule. It is just a rule. So for liabilities, you take in this case here opening minus closing, but always remember to reverse the sign by multiplying whatever you get. You simply negate. You simply change the sign. So what figure are we able to get, ladies and gentlemen, here? Somebody is telling me 15. Payable is a liability. Payable is a liability. So up to here, ladies and gentlemen, are we together up to here? Are we together up to here? Up to here, are we together somehow? Up to here, are we together? All right. Thank you so much. Please don't forget, if you're following this method of mine, don't forget that for liabilities, we must negate. We must multiply whatever answer we get with -1, always. So you say 515 minus 530, whatever you get equals times -1, like that. All right. Now from there, let's go to this tax paid. Let's go to the tax that was paid. So tax paid, you have to be very bright to be able to get the tax paid. Tax paid is one of those elephants. But of course, my students never get it wrong. For tax paid, my students never get it wrong. Because tax paid, if you wish, you can come and do, in this case here, a T account for tax liability. Tax liability. So you give me balance brought down. Give me balance brought down. Remember here you combine. So you combine current tax and a deferred tax. So balance brought down, of course, this will go to the credit side. This will go to the credit side simply because this is a liability. So is there somebody who is able to see the 2022 current tax? Is there anybody who is able to see the 2022 current tax? Current tax, 2022 current tax. Oh, they are not talking to me. Current tax for 2022. For 2022 current tax for 2022 from your statement of financial position. Is there anybody who is able to see the current taxation? Current taxation. So go to your liabilities. You can see your taxation 2022. Is there somebody who is able to see a figure of what year? A figure of 110. You know that's current. So current tax is 110. How about deferred tax brought down? You can see still here, we have under long term and current liabilities deferred tax. I can see a figure of deferred tax of 75. A figure of deferred tax of 75. So please come and do the same with balance carried down. So we have in this case here current tax, we have here deferred tax. So we have current tax and then we have deferred taxation. So current tax, ladies and gentlemen, now we are looking at current taxation. This is 15. Current taxation, I can see there it is 15. It is 15 and 90. So 15 and deferred is 90. So 15 and then we have 90. 15 and then 90, like that. Now remember here, we've been able to touch the two sides of our stick. We've been able to touch the opening balance, closing balance. In between here, there were activities that happened. So we have, in this case here, the tax for the year. So we have what has been taken to the profit and loss. So P&L as tax for the year, as tax for the year, tax for the year. So P&L, we will credit this. This increases my liability. So P&L, tax for the year, ladies and gentlemen. So first of all, I don't want to rush really. It will be very bad of me to rush. Up to here, are we able to follow how I've been able to take, tax payable we combine, deferred tax and current tax. So up to there, have you been able to follow how we have done that T account? Before I continue, because I don't want to really miss out anybody, because I know this is an area that must be tested. It's an area. There are areas in this case that we must always zero in to ensure that everybody is comfortable. To ensure that everybody is comfortable. Yeah. Thank you very much, Muganda. Thank you very much, Betty. Unfortunately, from this particular class, I don't know why, I don't get my responses here, or even being asked questions as fast as I would wish. Would want to get students who tell me, Mwalimu, no, let's stop a bit. Let's reason a bit here. And then when I ask for feedback, if you're comfortable again, why? Or no. So they can give me an ample time of teaching you even better, teaching you better. So I believe that everybody now is comfortable with how we have been able to bring down the balances and carry them down. Now the P&L for the year, ladies and gentlemen, the P&L for the year, what have they told us here? Look at the extracted P&L. So the extracted P&L, we can see extracted P&L. What are we able to see? Have crazy things. You can see income tax repayment claim. We're claiming 14. And then we can see deferred tax charge is 15 because we are combining the two. So basically, our tax that we are required to pay is only 1 bob. Is only 1 bob. Yeah, you can see the tax payable for the year is only 1 bob because we are combining this income tax. You can see we have something from KRA of 14 that we are claiming. And then we have a deferred tax charge for the year 15. So this is -1. This is -1. So -1, ladies and gentlemen, meaning what here that at the end of the day, we have to pay some money to the tax authorities. So liabilities was going up. So P&L here is 1. Then are you able to balance this? So then the biggest idea, this will be 185. This will be 186 if I'm not wrong. So 186 here. So in this case here, the tax paid will be equal to who? Tax paid. Bank. So debit that with bank. So the tax paid. Is it increasing? I thought it is decreasing. Which account is that, Amazon? Which account is that, Amazon? Which account is that? Is it taxation? Is it taxation? The P&L. Regarding what? Regarding what item? P&L is big, Amazon. Please help me. Yeah. What of repayment claim? Thank you so much. What of repayment claim? What of repayment claim? You see, what is happening here? Good questions. Thank you very much. So what is happening here? We have here income tax repayment claim. It's an income to us because we are claiming this money from KRA. Right? So KRA was to refund us 14. But on the same year, we have a deferred tax charge of 15. So meaning that the net tax liability is 1. The net tax liability for this year is 1. We are liable to KRA, in this case here, with that 1 shilling, of course, in millions, like that. In millions, like that. In millions. Current tax and deferred tax. I would want to see Amazon you using a different method, and then we compare notes. We shall be able to get the same. We shall be able to get the same answer. We shall be able to get the same answer. Of course, you can see this is 100 and something. Of course, it is decreasing. When it is decreasing, then we have paid. We've paid. So in this case, the tax paid is 81. So the tax paid here is 81. It's tax paid, remember, so it's cash outflow. It's cash outflow. It's cash outflow. It's cash outflow. All right. And then now go ahead and calculate for me the interest paid. So calculate for me the interest paid. Interest paid. So the interest we paid, ladies and gentlemen, in this particular case will be how much now here? Interest paid. Is there anybody who is able to tell us the interest we paid at the end of the day? The interest amount that we paid. Anybody who is able to tell us the interest amount that we paid? Abracadabra. You can see the finance cost they're telling us here. The finance costs are made up of interest and penalty for early loan redemption. So of course we are concerned with interest. So the interest that we paid here is 18, exactly 18. So the interest paid, ladies and gentlemen, here is 18. Mwalimu, why are you taking interest paid as 18? You can see under current liabilities, we don't have any account called interest paid. So we don't have any interest paid brought forward. We don't have interest paid in this case here carried down. All right. So it means that the interest for the year is 18 and we paid that 18 exactly. Exactly. If I was to do a T account, this is how my T account would look like. For this interest payable, this is how my interest payable account would look like. This is how my interest payable account would look like. So interest payable account. So we have here interest payable account. So interest payable account, ladies and gentlemen, there is no account called interest payable. So then the balance brought down here is 0. Balance carried down is 0. And in this case here, our P and the L amount is 18. So then if we balance this, we shall be able to get 18 both sides, meaning that for it to move from 18 to 0, there is bank here for interest paid, which will be what here? 18. So the interest paid, ladies and gentlemen, here is 18. So then come and please underline this for me and give me the cash flow from operations. Cash flow from operations. Cash flow from operations. And then now remember, when you are doing these workings, you shall never, ever look for perfection. All students who look for perfection in financial reporting, advanced financial reporting, they always repeat the paper. This is a paper that needs a lot of imperfectionism. What you need is just speed of tackling all questions, because we are very, very fair. You'll be surprised if this section, for example, we wanted you to earn like say 3 marks, they'll come and say any three out of this, any 3. So for example, most of my students, I know they will be able to get like all the marks here under working capital changes. So if you try to look for perfection here, then you will be able to waste lots of time. You'll be able to do one question in 1.5 hours, which is really the mistake that many financial reporting students do. The maximum time you're supposed to do one question is 37 minutes. 37 minutes, one question. So nobody in this case here shall be chasing for what here? For perfection. When you are doing your exams. When you're doing your exams, you shall never chase for what here? For perfection. But of course, in a class here, we want a perfect system here. Great questions there. Great. So, Mercy, if you look at, for example, the interest amount, the finance cost that we have, this finance cost, remember, we were able to come up here and first of all add it. This 24, we added it. 24, we added it. But now, when it comes to the actual interest amount that was paid, when it comes to the actual interest amount that was paid, this person now is giving us a narrative, telling us what these finance costs are made of, the 24 here. There is 18 for interest. There is what here? There is a 6 for penalty for early loan redemption. As if you look at the income statement here, this cash flow statement, I mean, we're interested in the interest that was paid, not the finance cost. The interest that was paid, which is what here? 18, and it's an outflow because we paid. So then are you able to give me, thank you, Mercy, for asking questions. I love students who ask questions because they're trying really to do what you're to follow. They're trying to follow. So then are you able to give me, in this case here, this figure? So for the students who are following me on YouTube, I expect you guys, first of all, to subscribe to my channel. The Zoom Azua here, my channel is called Joshua Ura. You'll be able to benefit quite a lot from that channel. A lot from that channel. A lot from that channel. So subscribe to it. Subscribe to it. Thank you so much. So Muganda is giving me a figure of negative 200. Muganda is getting negative 200. Are we getting this negative 200, all of us, as the cash flow from operations? Please get your calculator from here. Minus 44, plus this, plus this, plus this, plus this, minus this, minus this, plus, minus, minus. Are we getting negative 200 there? I would want to get students who are confirming. Yes, Teriki has confirmed. Elizabeth has also confirmed. Elizabeth has also confirmed. So you will not be able to rub your board. For my case, I must rub my board because my board is very, very small. Now I'm left with very, very few areas. So I'm left with very, very few areas. Which areas am I left with? Remember, if it's a cash flow statement, we normally have 3 sections. The first section is operational. The first section is always operational. The second section now will be, what cash flow will we get from investing? What cash flow shall we get from investing? What cash flow shall we get from our investing activity? So second section, we are looking at investing activities. So second section, I mean, this is very easy, very easy, very easy, very easy. So we are looking at investing activities. T is getting -2. Oh, after I've rubbed. There must be something that they never put in very well. What could that be? What could that be? Because -200 is the correct figure. -200 is the correct figure. -200 is the correct figure. Is the correct figure. I've rubbed my board. I don't know the figure that they forgot. Please allow me, in your paid group, I'll be able to share the solution. If you don't mind, I'll be able to share the solution with you. All right? And then we'll be able to see the numbers. I mean, if we are wrong, then we shall be able to work with your figure. If we are wrong, we shall be able to work with your figure. Is that okay? If we are wrong, we shall be able to work with your figure. But for now, just allow me to move forward to investing activities. Please allow me to move forward to what we call investing what year? Investing activities, like that. So whenever we talk about investing activities, what normally comes to our mind? We are investors, remember. So as investors, we invest in fixed assets, first of all. We invest in non-current assets, first of all. That is the major investment. So in this case, here in investing activities, look for the particular note. Yeah, thank you very much, T. Is there anything? So +81, +18. I know where these ninjas have messed up. I know. You know, tax paid is supposed to be negative, T. So this is supposed to be -81. Thank you very much, T, for giving us the numbers there. You're good. But now remember, this tax paid is supposed to be an outflow, -81. The same case with interest is supposed to be -18. Just check again and confirm. And thank you very much for writing those numbers. Those are the students I love. They are proactive. Now check that T and then tell me whether now you're getting that 200 minus. Tony has confirmed. Now I'm waiting for you, T, to just check and then we move on. Yeah, -81. Thank you very much, Muganda. -18. Thank you very much. So then investing activities, what am I looking at, ladies and gentlemen? Under investing activities, what am I looking at, ladies and gentlemen? Under investing activities, this free mark. Let's go to our notes talking about our physical assets first. Let's go to note number 3. I have this question paper courtesy of, was it Muganda who shared? I mean, that was also very good. So in this case, ladies and gentlemen, this is free marks. I mean, I cannot get it wrong. I will get everything balancing here. So if you look at your note number 3, what have they told us? During the year, the company acquired new plant at 60. Free marks there. So we brought in a new plant. We invested in long term. So in this case here, new plant acquired. So in this case here, we write there, new plant acquired. This is an investment. How much? 60. Those are like 2 marks in the brackets because it is money that went away. It's money that went away. So I wrote up there quite far. I'm supposed to write down here. Investing activities. Investing activities. We have here new plant acquired. We are told 60. Continue reading the same statement. If you continue reading the same statement, you'll again see ourselves selling. Elizabeth, are you able to see it now? Elizabeth, remember I was writing up here, but now I stopped. Now I've started writing from here. Now I started writing from there. Now you're able to see I'm an international disaster. Thank you so much. Yeah. So new plant acquired. This is an investment. We brought in a plant item. Money went away. So it's a cash outflow. I'm putting in brackets like that. So continue reading note number 3. So note number 3, what have they told us about note number 3? So for those of you who are here who would want to join RCM, don't hesitate. We are the best in the market. We are the best in the market. So simply call our number 0793 555 000. 0793 555 000. So you're told here during the year, the company acquired new plant at a cost of 60 and they sold old plant for 15. So we sold. So we divested. It's called divesting. Instead of investing, we divested. So in this case here, we have here disposal of old plant. Plant is long term. We got 15 positive. Disposal. Positive 15 like that. 15. Now from there, ladies and gentlemen, please, I will not stop there. Remember, they are talking about plant. How about in this case here, land and buildings? I'll need an account where I will be able to see what happened with land and buildings. Very easy. So mention there land and buildings. I'm so sure you guys love T accounts. So we have here balance brought down. We have here balance carried down. And remember, we always work with net book values. We always work with net book values. We shall always work with net book values in this account. So on land and buildings, is there somebody who is able to see land and buildings? Is there anybody who is able to see land and buildings? Balance brought forward. Balance brought forward. You guys are great. Balance brought forward. Land and buildings. Land and buildings. Land and buildings. Land and buildings. Balance brought forward. You see land and buildings here. Balance brought forward is what we came with in 2022. In 2022, you can see we have 420, isn't it? 420. And then the closing balance. We are working with carrying amount or net book value. Carrying amount or net book value. Carrying amount or net book value. Please don't forget that. So 420 versus 588. So balance brought down is 420. This 588. And you can see here the balance brought down. I'm bringing it on the debit side because this is an asset. This is an asset. Assets, we bring them down on the debit side. On the debit side. On the debit side. And then now we shall be able to look for, ladies and gentlemen, any note regarding purchases. Any note regarding what here? Revaluations. You can see note number 2. The company revalued the carrying value of land and buildings by an increase of 70. So this 70, ladies and gentlemen, is an upward increase here. It's an increase. So our land and buildings value increased. So shall be able to come and talk about revaluation. Revaluation. It's an upward or revaluation gain of 70. Of 70. Then we shall be able to ask ourselves, what in this case here will be making this land and buildings in this case here depreciate or rather lose value? All right. Not even lose value, but I mean reduce here. For example, when we sell, nowhere have they told us that they sold. When, for example, they lose value, depreciation, the current year's depreciation. So please go to that table and read the land and buildings, depreciation amount. Hapa sasa utapata mwanafunzi akikimbia akianza kuchukua depreciation ya 2022. Hii ilikuwa adjusted kwa P&L ya last year bwana. Hapo unachukua depreciation, most current year is 2023. So the depreciation amount there, ladies and gentlemen, we are able to see a figure of what here? A figure of 12. A figure of 12. Here, 2023 depreciation. Here, 12. Don't work with the plant. Remember these land and buildings alone. So 12 here. So then you'll be able to tell me which side is pregnant, which side is heavier. So this 490, of course, this side will be heavier. So 588 plus 12 gives me what here, somebody? 588 plus 12 gives me what, somebody here? 588 plus 12 gives me what, somebody here? 588 plus 12 will give me what figure? 600. Gives me 600. So both sides 600. Both sides 600. Then, ladies and gentlemen, I'm able to see here that I acquired. So in this case here, we have land and buildings acquired. Land and buildings. Because I can see in this case here, there is an increase. This side here, there is something that was done. To make this side 600, there is something that was done. So 600 minus 490 gives me what figure? Some land and buildings acquired. So I'll be able to put here bank. So I can see somebody giving me 250. So 600 minus 70 minus 420. Please recheck again. It is supposed to be 110 bank. So this is an outflow. So in this case here, we have land and the buildings. Land and the buildings acquired. Land and buildings acquired. Land and the buildings acquired. In this case here, coming to 110. We acquired buildings and the cash flow. Money went away. So 110 is supposed to be negative. 110 is supposed to be what here? Is supposed to be negative. Is supposed to be negative. Remember the other investment that very few students will be able to remember. There is something students are not able to remember here. We have interest receivable. Why do we have interest receivable? Because we invested in fixed loan accounts. So we have here, we invested in fixed loan accounts. All right. So on investing activities, we have, ladies and gentlemen, interest receivable here. Interest received. Interest received. Interest received. So are you able to give me the amount of interest that was received? Is there somebody who can do that working for interest received? How much did we receive ourselves in the year? Just track the interest account. Track the interest account. Track it. Track it. Just track the interest account. Track it. Track the interest account. Or go to any note. So I can see interest receivable here is 12. Very good. That's for the year. Under current liabilities, are we able to see anything on interest? Anything on interest? Anything on interest? Because interest received in the year, ladies and gentlemen, is an investing activity. It is an investing activity. Anybody who is able to see any note talking about interest? The receivable one is 12, okay. I can see some talks there which are very, very good. Very, very good. Let me just see what they're saying. Teriki is saying no. No worries. No worries. Just leave it like that, but I will be able to bring it out very well as I continue. But know that here we can't bring that 12 the way it is, because the 12 is receivable. The 12 is receivable. And here I'm looking at cash flow received. How much interest was received. So when I'll be looking at those variables, 8% loan variable, and another one there, you'll be able to see how I bring out this interest, in this case here, received in the year. For now, let's just leave it like that. And then we go now straight away to the financing. You guys will not be able to rub your space. Let's just leave this like that. So we got the most interesting. The most interesting, yeah. Under current asset, we have interest receivable. Amazon is saying under current assets, we have, am I the one who is not seeing it? Am I the one who is not seeing it? Why am I not seeing it? Ah, it is here. Yes, it is here. It is here. It is here. So we have 3, carried down 5, and then interest receivable in the year 12. 12. Yeah, I would have gotten it very easily, but now we can just handle it here. So we have, ladies and gentlemen, here, interest receivable. Thank you so much. Interest receivable. So then we have balance brought down. The 2022 one is 3. And then we have balance carried down. Balance carried down, ladies and gentlemen, the 2023. The 2023 for interest receivable here is 5. And then we have, in this case here, P&L. In the P&L, we can remember that 12. In the P&L, we can remember that 12. So this will be 15, 15, meaning that the difference, in this case here was done what year? Meaning that the difference was paid. Because you can see we began with 15, and then we had 5. So interest paid will be 10. So interest paid, in this case here is what year? Is 10. Interest paid is 10. So bank. So under interest received, not paid, but received. Oh, sorry for that. Sorry for that. I think we need a break. Interest receivable is supposed to be the other way. This is receivable, an asset. This is an asset. It's supposed to be like this. Sorry for that. It's supposed to be like this. Balance brought down because this is an asset. 3. So balance carried down. Balance carried down is 12 there. And then 5. So we have here P and L, 12. So that now we have 15, 15. And then we talk over, in this case here, interest received. Bank, 10. So we credit this account, we debit our bank account. So bank interest received is 10 like that. So then are you able to give me the net investing activities cash flow? How much do we have there in total? Investing activities cash flow. Investing activities cash flow. How much do we have there in total? I'll be able to show you another way of getting that 10. When I look at the financing, when I'll be looking at my loan obligations, I'll be able to show you another way of getting that 10. So is there somebody who is able to add for us and give us investing activities minus 60 plus 15 minus 110 plus 10? How much are we getting here? We are getting negative 140. Now we go to the most interesting section of this cash flow. The most interesting section, which is the third section, which is the last section. The last section, we call it financing activities. We call it financing, but remember again, you don't have to get like everything. How we mark this thing, we are normally very generous. We are normally very, very, very generous. I'm telling you, it's about what year, it's about your speed and getting like a general know-how of this topic here. Otherwise, it's a very straightforward thing. Now we go to the place that I love before we go to the balancing effect of it. So the other place that I love so much is the financing activities right there. Financing activities right there. Financing what year? Financing activities. So the last section is what we call the financing activities. So the last section is what we call the financing activities, of which we shall take a 3 minutes break. We shall take a 3 minutes break. A 3 minutes break. When we come back, yeah, 3 minutes break. When we come back, then we should be able to do what here to finish. But up to here, ladies and gentlemen, before we take the break, are we somehow together? Are we somehow together? Are you guys getting some key points here? Are you guys getting some key points here? Are you guys getting some key points here? Because my aim is to simplify financial reporting for you. I don't want you to fail in this paper. No. I would want to simplify really this paper for you. So you're taking exactly 3 minutes. Yeah, exactly 3 minutes break. So shall come back at 7:13. With financing decisions in 3 minutes. In 3 minutes. Because I know what financing decisions mean. I know what financing decisions mean. For those of you who are doing financial management, when we talk of financing activities, we are basically looking at what we call financing decisions. Under financing decisions, we are looking at two components. Under financing decisions, we are looking at two components only. So we have our investing. So under our, not investing, but financing decisions, we are looking at equity, ordinary share capital, and we are looking at debt. So three key things here under financing decision. We shall be asking ourselves, ladies and gentlemen, whether we issued new shares in the period and received money, whether because they financed us, the people that we sold shares to, they financed us, we gave them shares, they gave us their money. We must pay them dividends. So you need, in this case here, under finance, you must have dividends. And then for debt, you must see whether the debt instruments we have, whether we paid, or in this case here, we issued new loan notes. So very easy. We shall start with share capital. So share capital and the premium. We combine the two. So of course, most of you love the T accounts. You'll have to do T account somewhere there. So we have here share capital and the premium. So these are liability account. So you give me balance brought down. So in this case here, we have share capital and the share premium. So is there somebody who is able to see the balance brought down in 2022, for share capital? Is there anybody who is able to see this? For share capital, is there anybody who is able to see this? So for share capital, ladies and gentlemen, what are we able to see? Oh yes, I can see brought down 200, and then I can see share premium is 0. So 200 and a 0. 200 and a 0. For share capital, I can see 200 and 0. Let's be very, very keen here. So you can see ordinary share capital brought down is 200. And then if you look at the share premium this year, we have nothing there, right? We have nothing there. So we have 200 and a 0. So basically 200 and 0 here, right? And a 0 there. But look at the balance carried down. So balance carried down, I can see share capital of how much? Balance carried down, I can see share capital of 300, and I can see share premium of what year? Of 60. So the heavier side is this side, 360. So then is there somebody who is able to give me this balancing figure? This balancing figure, ladies and gentlemen, what do we have here? This balancing figure, what do we have there? Where they are now not talking to me totally. They're not talking to me totally. So the balancing figure is coming here, 160. So in this case here, these are new shares issued. So under financing activity, so share capital and the premium is 160, and it's positive because you can see this is bank. So we are creating this account, debiting our bank account. So 160, we received 160. We received 160. We received 160. So are we in agreement, ladies and gentlemen, up to there? Are you guys able to see what Mwalimu has done? Are you guys able to see what Mwalimu has done? You combine the two accounts, share premium and share capital shall always be combined. Are we together? Up to there, my good friends? All right. Then after that, pay these guys dividends for having given you their money. It's under financing. So come and read there, dividends paid. Dividends paid. Fortunately, they have given us the dividends paid. Fortunately, and by the way, I forgot my laptop's charger at work, and I can see this thing will go off anytime. It will go off anytime. It's going off at the wrong time. I'm also becoming too busy, but we shall overcome. I'm not supposed to be forgetting some things here. And it's unfortunate because I have some other class at 8 p.m. I've tried looking for the charger in vain, but we shall overcome. So you can see dividends of shillings 25 million were paid during the year. Dividends of 25 million were paid during the year. You can see we are able to see my charger thing. international disaster. Actually, this one will just go off now. With I think 9 minutes remaining, I'm so sure this will go off now, but we shall overcome. So in this case, your dividends paid, we have here 25. Dividends paid, we have 25. And because, ladies and gentlemen, it is an outflow, so 25 like that. Now, ladies and gentlemen, from there, I would want us to move with speed and look at the 12% loan notes. 12% loan notes, what happened here? If you look at, ladies and gentlemen, if you look at your handout